Well, good afternoon. James Preston with you. Thanks for joining me on Kalkine TV. This is the Economic Corner, where we update you on all the biggest global economic announcements. And leading the pack today is a data drop from the Australian Bureau of Statistics. According to the ABS, the seasonally adjusted unemployment rate fell to 4.9% in June 2021. Head of Labour Statistics at the ABS, Bjorn Jarvis, said June saw the 8th consecutive monthly fall in the unemployment rate. According to Jarvis, the declining unemployment rate continues to coincide with employers reporting high levels of job vacancies and difficulties in finding suitable people for them. The number of unemployed people fell by 22,000 in June, down to 679,000. This was around 325,000 people, just below the peak of 1 million unemployed back in July 2020. The youth unemployment rate decreased by 0.5 percentage points to 10.2%. The last time we saw a youth unemployment rate of 10.2% was in January 2009. Jarvis added that the hours worked data continues to provide the best indicator of the extent of labour market impacts from lockdowns. Hours worked in Victoria fell by 8.4% in June, compared with a 0.3% fall in employment. This highlights the extent to which people in Victoria either contended with reduced working hours or close to no work at all. Moving on to China's GDP numbers, and the country's gross domestic product increased by 7.9% in the second quarter from a year ago. China's economy slowed largely in line with forecasts in the second quarter. The recovery showed signs of steadying as consumption accelerated throughout June. Meanwhile, retail sales rose 12.1% in June from a year ago, and on the other hand, industrial production also grew by 8.3%. China's economy has largely rebounded from the coronavirus hit last year because of the pent-up demand and robust foreign orders for its exports. But as per the recent data, the recovery is losing some steam, with increased raw material costs and supply shortages hurting factory activity. Moving on now to China's GDP numbers, and the country's gross domestic product increased by 7.9% in the second quarter from a year ago. China's economy slowed largely in line with forecasts in the second quarter, and the recovery is showing some signs of steadying moving forward as consumption accelerated throughout June. Meanwhile, retail sales rose 12.1% in June from a year ago. On the other hand, industrial production grew by 8.3%. China's economy has largely rebounded from the coronavirus hit last year because of the pent-up demand and, of course, the robust foreign orders for its exports. But as per the recent data, the recovery is beginning to lose some steam, with increased raw material cost and supply shortages hurting factory activity. Let us now look at the next piece of news, and we're moving from Asia to North America with an announcement coming in from the Bank of Canada overnight. The bank maintained its policy rate and forward guidance while adjusting the quantitative easing program. The bank is maintaining its extraordinary forward guidance on the path for the overnight rate. This is reinforced and also supplemented by the bank's quantitative easing program, which is being adjusted to a target pace of $2 billion per week. This adjustment reflects continued progress towards recovery and the bank's increased confidence in the strength of the Canadian economic outlook. The bank is of the view that the global economy is recovering strongly from the COVID-19 pandemic and is seeing continued progress on vaccinations, particularly in advanced economies. However, the recovery is still highly uneven and remains dependent on the course of the virus. The recent spread of new COVID-19 variants is a growing concern, especially for regions where vaccination rates remain quite low. Time now for a short break on the Economic Corner. On the other side of these messages, there's some very good news for content creators. All the details soon on Kalkine TV.
Hi, this is Andy Liu broadcasting from Kalkine Media Studio in Australia, and I'll be hosting the new Kalkine Wellness Show. The half-hour show will cover topics from how wellness as a concept has become even more significant during COVID, to how becoming vegan may improve your health, and much more. We are excited to showcase our live streaming show to our audience of millions overseas and in Australia. Tune in to Kalkine TV and join me.
Welcome back. Great to have your company on Kalkine TV. I'm James Preston and this is the Economic Corner. Before we get into some big news for social media content creators, let's first take a look at an important update from the US. US Federal Reserve Chairman Jerome Powell said the central bank would not hesitate to raise interest rates to keep inflation under control. He expects price pressures to ease later this year. Mr. Powell said in a semi-annual report to House lawmakers that the inflation has been higher than expected and a little bit more persistent. Powell spoke about inflation just a day after the government reported the fastest monthly rise in consumer prices in 13 years. The Fed has held interest rates near zero since the coronavirus pandemic hit the US economy in March 2020. The central bank has said it expects to keep rates there until it's confident that inflation will hold at its 2% target and the labour market has healed. Now, whether you're dancing, pulling a prank or doing a deep dive into your favourite topic, there's some huge news for content creators. Social networking giant Facebook said that it would pay more than $1 billion to content creators on its social networks through 2022. With this announcement, Facebook has joined its social networking peers. Snap Incorporated Snapchat, Google's YouTube, and ByteDance Limited's TikTok have also announced plans on investing in people who drive engagement on their platforms. Facebook said creators can receive payments for hitting certain milestones. The company also plans to provide seed funding to help creators cover content production costs for the platform itself. Facebook said that the programs will start on an invitation-only basis. And if you don't see me presenting the Economic Corner next week, well, that's because I've signed a lucrative deal as a shuffler with Mr. Mark Zuckerberg. Let's move on now to an update affecting Americans. The first monthly payments of the child tax credit will hit Americans' bank accounts today. If you're not familiar with the child tax credit, it's a federal benefit that reduces income tax liability for people with children. It was created in 1997 and since then has expanded several times. It's a credit that reduces taxes owed as opposed to a deduction that reduces taxable income. The credit was $2,000 per child under the age of 18, based on the child's age at the end of the year up until 2021. And for 2021 only, Congress has now increased the credit to $3,000 for children aged between 6 and 17 and $3,600 for children under the age of 6. The Internal Revenue Service will make the first payments on July 15 and they'll then continue monthly for the rest of the year on the 15th of every month. On that note, it's time to wrap up the Economic Corner for today. Hopefully it's provided you with some insights from all across the globe. Keep watching Kalkine TV for all the latest market developments and live updates on Australian markets and of course diverse themes and sectors. This is James signing off from the Economic Corner.